Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching Easynomics. We are counting down to the GDP data for the third quarter that is expected very shortly. Will India's growth see a dip, or will we continue to grow at a faster clip than many other countries across the world? And joining me to decode the data live on the show today, Rajni Sinha, Chief Economist at Care Ratings. We are also joined by Sunil Sinha, Director and Principal Economist for India at India Ratings. Thank you very much for joining us. Sunil, I start with you in terms of your expectations. A poll that's been conducted seems to suggest that 6.6 or thereabouts is likely to be the number. What's your own sense, Sunil?
Well, Siddharth, our estimate is 6.5%, very close to what you just said, 6.6%. And we have seen this trend and we expect that to continue even this fiscal, that the second half or, the third and fourth quarter is likely to be lower than the first and second quarter.
Okay. Rajni, what are the numbers that you're working with?
Siddharth, we are more bullish than that. We are expecting GDP growth in the third quarter at 6.9%. And this we are mainly basing on good growth in the manufacturing sector, services sector, robustness continuing. We remain a little cautious on consumption growth. We think it will be weak. Agri sector will record a weak growth, but the growth will basically be led by strong investment growth.
Okay, strong investment growth. Sunil, what is the broad set of reasons for that you expect for 6.5%?
Well, one of the reasons, of course, Siddharth, is that the industrial growth, more particularly the manufacturing growth, is unlikely to be as good as we saw it in the second quarter. Because most of the inventory buildup took place in the second quarter, whereas the third quarter was largely dominated by the consumption of those goods. So typically, we expect the overall industrial, especially the manufacturing growth, to be much lower than what it was in the second quarter. This does not mean that the industrial growth would not be there. It will certainly be there. So that is one of the key reason, and the second reason, of course, is the the net exports. We expect it to be higher than the second quarter, which simply means that it will shave off some bit of from the overall GDP growth.
Okay, Rajni, you spoke about some of the brighter sort of parts of the data and your own sense. What about what some other economists are attributing, which is that statistical normalization is going to contribute to a lower number?
We are also expecting to decelerate from what it was in the second quarter. So the 6.9% is also lower than what we had in the second quarter number. So yes, that deceleration, we are factoring that in for the third quarter as well as fourth quarter. And for overall, for the fiscal year, we are expecting around 7% growth. But at the same time, while yes, the deceleration will happen, some of the concerning areas, like I mentioned earlier, would be poor growth of the agri sector because the monsoon has been not good and uneven. Poor growth in terms of expenditure, if I look at it, the consumption growth is expected to remain feeble, but we are expecting some improvement in third quarter vis-a-vis what we saw in the second quarter. And if I look at the strong points, we are expecting manufacturing sector growth to be good. But yes, there will be a deceleration in manufacturing sector growth also in third quarter when compared to the second quarter, but it would still remain healthy. And like I mentioned earlier, investment growth will be strong, again led mainly by the government sector.
Okay. What about the fourth quarter? I know we are getting ahead of even the third quarter numbers, Sunil, but if there is a deceleration, that means it is likely to continue because it can't be reversed all of a sudden.
Siddharth, you are right. I mean, the fourth quarter growth is also likely to be, somewhat lower than the third quarter growth. I mean, we expect it to come in close to about 6% or a little more than 6%. And this again, as I said earlier, broadly follows the pattern that we had witnessed last year.
Okay, I'm waiting for the numbers, viewers, and that's what I'm looking for, trying to refresh and get the number the fastest that we can to you. We just now ticking down on the clock, really. Let me come to you again, Rajni. For the full year, what is the number that you are now working with?
So Siddharth, we are looking at around 7% growth for the full year. And again, the story, as I said, for the third quarter, for the full year also, the story is pretty much similar. The growth will be weak for the full year also. If we look at it, the growth will be quite weak for the agricultural sector. For the manufacturing and overall for industrial sector, it will be good. And so will be the case for services sector. And again, on expenditure side, we expect for the full year also the consumption growth to be relatively weak and the growth to be mainly led by investment. So far, it's only being led by government sector investment. But what we are expecting is that we could see some improvement in private sector investment also happening in the subsequent quarters. But yes, that is, we don't expect a sharp jump to happen on that front. That is going to be a gradual increase maybe in the next few quarters.
Okay. Sunil, how significant is the external stimulus as far as the Indian economy is concerned? We are seeing that the worst may be behind us as far as global situation is concerned. Some of the fears of a recession have not been realized so far. So going forward, is the global macro situation also going to be a help of sorts for India?
Siddharth, I mean, you are right. I mean, the kind of slowdown everyone was expecting in the US economy hasn't panned out. However, things have not been as good as US in the euro area. There, of course, things have been more or less played out the way it was expected. Like, UK economy is now in recession and so on and so forth. I think the bigger concern going forward for the Indian exports would be that, in the last, immediately after the COVID, there was a sudden jump or bump up in the exports from the emerging economies. But as the things have started stabilizing in those economies and the spurt in the, the money which was put out by the government in the pockets of the household, now behind us, gradually the economy is again moving away from the consumption of goods to the services. So that's one trend which is visible right in our exports also, in the sense that
8.4%. October, December GDP growth at 8.4%. Viewers, I hope we have got that right, because the number is far beyond what anyone was expecting. I'll request our producers to bring up the consensus number, and if I recall correctly, 7.3% was at the upper end. So I just hope the details of this number as we get them will be very, very significant. But viewers, India third quarter GDP, the number that we have right now is coming in at 8.4%, and that obviously a very, very significant number. As we get you more details, I'll be able to provide you the color of this number, but this is the number that we have just now received. on the screen. Quick thoughts on this, Sunil?
Well, it certainly is beyond anybody's expectation, as I said
Sunil, that
earlier.
question was for you. I can't hear you.
Hello,
Sunil,
am I audible?
yes, yes.
I was saying that, of course, the number of 8.4% is beyond anyone's expectation. The only way I can probably interpret is that the kind of momentum we had seen when we moved from first quarter to second quarter, perhaps the same momentum has continued in the third quarter, though most of us believe that perhaps the momentum would somewhat peter out because of the kind of consumption growth that we had witnessed in the second quarter. So we'll have to wait and look at the detailed numbers, how the consumption expenditure has panned out, although all of us knew that the investment or the capex number would continue to be good.
Okay, let me also add for our viewers, the FY24 GDP estimate has been revised to 7.6% versus 7.3% earlier. Indranil Pan, Chief Economist of Yes Bank, is also with us. Indranil, quick reaction on the numbers that we have just read out. 8.4%, way beyond any estimate, and we had more than a dozen and a half here flashing on the screen. What could this be attributed to, Indranil?
Very honestly, immediately I don't know what this could be attributed to. Now, on a very sort of contextual level, I think even if I look at the previous quarter's number, the gap between the GVA, which was getting driven by the manufacturing sector's supersized profits, as they were not passing on any price benefits to the end users, that was matched on the GDP side by a huge jump in the discrepancies. Now, whether a similar thing has happened here, because we have not yet got the GVA number, I don't have it on my screen yet.
Okay, I have the October-December GVA growth number at 6.5% versus 4.8% in the same period last year.
So now that's the point, in the sense that if you look at the divergence in terms of the forecasters who have provided these numbers, GVA is much closer than to most of the estimates that we had on the street, while the GDP number has shocked on the higher side. So I think unless we get the actual numbers and see what it is due to, it would be very difficult for us to really comment what is happening over there.
Okay, I have more numbers, and I'm going to quickly take you through that, viewers. The April-June, that is quarter one GDP growth number, has been revised to 8.2% versus 7.8% earlier. July-September revised to 8.1% versus 7.6% earlier. April to December GVA growth at 7.5% versus 6.9%. The overall numbers, the FY24 GVA growth, the number that is at 6.9%. FY24 nominal GDP growth to 9.1% from 8.9%. So April-December nominal GDP growth 9.4% versus 16.1%. The FY23 GDP growth has been estimated at 7 from 7.2% earlier. Some of these numbers, viewers, apologies for this, but the data release was jumping all over the place. So I'm going to restate this once again for everyone's benefit. India October-December GDP growth at 8.4% versus 4.3% earlier. These are the numbers. Sunil, I'm coming back to you. Try and make sense of this for our audience.
Well, I mean, one of the way to look at it is what Indranil was just saying, that when you look at the demand side number, which is the GDP number, vis-a-vis the GVA number, which is the supply side number, the divergence could be due to the higher net taxes, in the sense that corporate results have been showing that the results have been pretty robust. But at the same time, we also know that all of that is certainly not been passed on to the consumer. So higher corporate profitability, in other words, more taxes paid to the government. So the net taxes could be the reason. But we'll have to really look at this and try to really figure it out, what exactly is driving this kind of a wedge between.
Okay, one more
the
number,
GDP.
the FY22, viewers, FY22 GDP growth has been revised to 9.7% from 9.1% earlier. Rajni, over to you, because this is something that will take some explanation. Sorry, I think you are on mute. You need to unmute yourself, Rajni. No, can't hear. Yeah, now go ahead. We can hear you now.
Yeah, so Siddharth, I started by saying that I was relatively more bullish, but definitely I wasn't so bullish. The number completely beats my expectations and the market expectations. We'll have to look at the numbers more deeply to understand this, why is this number so much higher than market expectations. But looks like what Indranil and Sunil highlighted, that could be the main reason, because, net taxes being higher, and that could explain why the GDP growth is so much higher than the GVA growth. The interesting aspect which I would be looking at is if the consumption, which all of us are very keen to see, if the consumption growth is showing any improvement. So it would be interesting to see if consumption growth in the third quarter has shown an improvement. Whereas we know that if we look at it from the expenditure side, investment growth, everyone was expecting it to be good. So what I will be looking at is what has happened to the consumption growth in the third quarter.
Okay, still looking for some of those details and waiting for the release to be put up. I'm going to throw it to Indranil. Continue explaining this in the with whatever data we have available at this stage, Indranil.
Okay, so I think slightly confusing for me in the sense that all the numbers, some of the numbers that you actually read out. So 2 years back, there was an upside or a revision up in terms of the GDP number. And I'm not sure what is the next number, which was at 7.2%. What has happened to that number, therefore. So I think to a certain extent, what I now sort of probably see that there are certain base issues also that might be playing through in terms of what the estimates actually come out to be. So that's point number one. And point number two, I think we'll have to see the data very carefully in terms of trying to even figure out, because I think in the history of the time when we have seen both the GVA and the GDP numbers getting published, rather the new methodologies that have come up in terms of estimating the value addition in the economy. This is, I think, the widest sort of gap that we have seen. And that really needs some attention in terms of figuring out what it is. I have immediately not yet been able to download the press release from the MOSPI site. And unless I see the data, it will probably be very difficult for me to even take a guesstimate.
Which is the issue we are also facing, Indranil, for some reason. I am unable so far to locate the entire release. I'm sure it's there, but the absence of that is perhaps holding us back from the discussion. Sunil, let's just look beyond this. So this clearly means that in the quarter that we are discussing, India was the fastest growing major economy all across the world.
Well, it has been one of the fastest growing, or perhaps the fastest growing, if you look at the G20 nations. And the growth momentum, as I said earlier, which we had witnessed in the first and second quarter, appears to have spilled over to the third quarter, contrary to our expectation. And part of the reason, I'll again go back to the point which Indranil was making, was that, look, I mean, the fiscal year 22 number has been revised from 9.1% to whatever 9.2 to 9.7%, whereas the number for fiscal year 23, immediately the preceding year, has been downgraded from 7.2% to 7.7%. So clearly, I mean, some bit of base effect is finding a reflection in the numbers that we are getting for the current fiscal because of the downward revision of the last fiscal year. But yes, I mean, as Rajni said, the crucial piece would be to really understand what's happening to the consumption. Because the other component, namely the investment demand and to some extent even the government final consumption expenditure, perhaps are on the expected lines.
Okay, I have some more data details now, viewers, and please bear with us because the normal sort of sequencing of the data that is available has not been available so far, but I have two bits to share with our panel here and get their response. October-December services growth at 7% versus 7.2% a year ago. Industry growth at 10.4% versus 0.6% a year ago. I'm going to repeat the industry growth number once again, 10.4% versus 0.6% a year ago. Services growth at 7% versus 7.2%. And we also 7.2%. Okay, Indranil, you want to take that quickly?
From the numbers that you just read out, I think to a certain extent the industry of the Q3 has undergone a downward revision, and that's also possibly a reason why it is pushing up the industry growth in the Q3 that we are seeing the data of. Now, having said that, I think the other, obviously, the question therefore is that if the balance sheet perspectives of the manufacturing sector has been quite robust over the last few quarters. The manufacturing growth in Q3 of last year, as per the previous reading, was a 1.4 negative. And whether that has gone down will also support the higher growth in manufacturing number, which is a part of the industry segment. So once again, I think these are all sort of initial numbers that we are talking about, but on the surface, I think the industry number has been lowered from the earlier sort of number of 2.3%, and that could also be a reason why the industry number in the current quarter of the Q3 that we see has continued to be in the double digit.
Okay, two more numbers that have come out. October-December private final consumption growth at 3.5% viewers versus 1.8% a year ago. We'll try and bring up those numbers quickly on the screen as well. Government consumption growth at a negative 3.2% versus 7.1%. And just for the benefit of our viewers, these four that I'm repeating: private final consumption growth 3.5% versus 1.8%. Government negative minus 3.2 versus 7.1%. The big one being industry growth at 10.4% versus 0.6%. Services growth marginally muted at 7 versus 7.2. I now also have the capital formation growth number at 10.6% versus 5% a year ago. I'm going to go across the rest of the panel. Sunil, comment on these numbers, please.
Well, I mean, as all of us were expecting, the consumption expenditure, number is certainly what we were expecting, that it will remain muted, as was the case even in the second quarter. But one point I just want to highlight with respect to the industry is that what we are seeing in the GVA number is not corroborated by the IIP numbers. So when you look at the IIP numbers for the third quarter, they are fairly muted. But when we come to the GVA number of industrial growth, they appear to be very good. And part of the reason here could be that the kind of, commodity price softening that we have seen. And as we were mentioning earlier, that the entire benefit of lower commodity prices or lower input cost has not been passed on to the final consumer. So the corporate benefits or corporate value added has been much higher. And that is finding a reflection in the overall industrial number. And that, to that extent, has certainly provided the push to the overall GDP. But in terms of output, really things are not as bright as the GVN numbers are suggesting.
Okay, Rajni, we have the details on private final consumption growth at 3.5, almost double of what it was in the same period a year ago.
Was, but these improvements what we had seen in the second quarter, which we were expecting. So I would say the consumption growth number is very much in line with our expectations. Still does not explain as to why the GDP growth number is so much higher. Because otherwise, when you spoke about the breakup in terms of consumption and investment, it's the numbers are broadly in line with what the market was expecting. So looks like there is some base effect working, there is some discrepancy number which needs further explanation, and we will have to go deeper to understand that.
Indranil, what could be this base effect if that is playing out? Because it's hard to sort of sense a base effect with these sorts of numbers.
May not be. First of all, we'll have to look at the absolute numbers. But what you just even taking off from Rajni's point, I think in Q3, the private final consumption expenditure was initially at 2.2. That I think you read out at 1.7. Which also could be leading to this 3.5%. So the absolute numbers will actually throw a much better light, or a Q-on-Q number will throw a much better light in terms of how private final consumption expenditure has been moving. But having said that, I think Q3 was also a period which encompasses the festive period. But the fear, therefore, that I have is that and I'm sort of airing this very cautiously, could Q4, when the festive demand is not there, could Q4 have seen a much weaker private final consumption expenditure is the critical question that we need to ask. And once again, the point that all of us have been making, unless we are able to figure out how and why this 6.5 versus the 8.4% is emerging between the production side and the consumption side, it would be very difficult to take a view incrementally on where GDP number is going to be. And I'm sure all of our numbers in terms of the GDP growth at least needs to be revised significantly higher, while the GVA numbers may not be getting revised up in that way. And that could also have its implication in terms of the numbers that we look at in FY25.
Okay, manufacturing numbers on the screen, double digit 11.6%, 9.5% in construction. So, Sunil, manufacturing ticking along very, very nicely. Construction, we are seeing on the ground significant construction happening all over the country. Is that also part of the reason to explain this massive 8.4% quarterly number?
As I said earlier, Siddharth, I mean, when you look at the IIP numbers, I mean, certainly within IIP numbers, there are some segments which are doing well. I mean, because of the government capex. Say, for example, the infrastructure goods, similarly, even the capital goods. to some extent even consumer durable, consumer non-durables, but not so much consumer durable this year. So there is a mixed, bag so far as IIP numbers are concerned. And as I said earlier, that when we look at the GDP or GVA numbers, we are essentially not looking at the output. We are looking at the value added, which is essentially the difference between the output prices and the input costs. And as I said earlier, the kind of input cost reduction that has happened over the last 1 year or so, that has not been fully passed on, which simply means that the value addition at the industry level has been much higher than actually the output going up. And that's why there is such a big disconnect when you look at the IIP number and the GVA number. And most of us, when we looked at the overall GDP number for third quarter, I think this is the biggest disconnect in my view. Because most of us looked at the IIP number to understand what could be the industrial growth in the third quarter. But here, because of this reason, which I explained earlier, the actual industrial growth number has turned out to be way higher than what anyone of us would have anticipated, and has certainly provided significant boost to the overall GDP growth.
Okay, viewers, on a side note, I'm already seeing commentary on Twitter, which is now called X, and clearly market participants are reading this number in a way where the market opening tomorrow is likely to be very different from what had been anticipated earlier, because this number is going to be a big green candle for the markets really. Rajni, does this mean that what kind of revision will you have to do to your full year forecast now?
So, Siddharth, we'll have to understand these numbers properly because we still can't figure out this 8.4% is much higher than what all of us were expecting. So we'll have to see that. But I think more than, the statistical understanding which all of us will do, the critical aspect is whether this growth will be sustained. Because definitely India is performing much better than what we are seeing all across us globally. But some of the critical points that we are wary of is one, whether the consumption growth momentum is going to pick up, whether the divide between rural and urban consumption, whether in the higher income category and lower income category, whether that's going to narrow, whether the private investment is going to pick up in a meaningful way. So those are the things which we would be tracking closely to kind of, form a view as to what's going to happen to growth in the coming year, whether it's going to be sustained. As of now, our expectation for next year was around 6.7% GDP growth. I'm talking about FY25. And for FY24, we were expecting around 7% growth. But once we understand these numbers for the third quarter, probably we will be revising upwards the FY24 number.
Okay. Sunil, what is the likely revision that you are going to undertake?
Yeah, our expectation for the current fiscal was 6.9%, and for the next fiscal, we were expecting 6.5%. But certainly, given the numbers that we have seen today, we'll have to study it more carefully and really understand as to, firstly, why there is so much of wedge between GDP and GVA. And secondly, that when we will be re-estimating the GDP growth for the next fiscal, we'll have to understand whether the similar kind of a wedge is likely to get repeated even the next fiscal. And that will probably tell us how should we really look at the 25 GDP numbers and where it should be.
Very clearly, viewers, the number that we have seen is an absolute surprise, a good one, a positive surprise. And the headlines, just to recap them as we wind down our conversation today, very clearly as far as FY24 is concerned, the third quarter number, absolute surprise way beyond any consensus. Double-digit growth in construction, a good growth in manufacturing, and we have clearly seen that the estimates, both the first revised estimate for FY23, the second revised estimate and the final estimate for the previous financial year FY2022 and the third quarter number have been revised. India at 8.4% in the quarter is a growth rate that had not been expected. It is a great news as we head into election season, and with this kind of growth, the question and attention will now shift viewers towards monetary policy response, because inflation control therefore becomes the key task. If we are continuing to grow at this rate, then there are no growth slowdown worries. Just yesterday, the conversation that we had was, will it be a 3-quarter low? But clearly, this is a many quarter high that we have seen in the quarterly numbers, and it is going to play out in the stock markets as well as in monetary policy making in the days, weeks and months ahead. Thank you very much for your patience, all 3 panelists today, because the numbers were not just a surprise, but perhaps the surprise also meant that they got delayed in the manner they were shared. Sunil, Indranil and Rajni, thank you very much for your time. With that, it's a wrap. We'll be back with more. Until then, goodbye.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Alright guys, so what you see behind me right now, if you can see it, yes there it is, it's the concept laptop with a transparent display by Lenovo.